focus on the pharmaceutical space now. There's a lot that has happened in individual names. Nithya Balasubramanian, the director at Sanford Bernstein, joins us now to talk about that. Nithya, good morning and thanks for joining in. At the onset, let me just start by asking you about the space as a whole. You know, there's this theory that in a tough environment when risky assets are not preferred, the street moves more towards defensives like pharma. So do you expect the pharma stocks to outperform? And then we'll get to them one by one.
See, I think the thesis makes sense. However, there are some concerns with the pharma sector, largely pertaining to the US market. So generic pricing deflation has been quite high in the last year. We are also seeing a lot of traction with respect to FDA inspections, and more often than not, they're ending up in a 483 and a bunch of 483 observations. So I think investors are still cautious, even though, as you're pointing out, pharma is a defensive sector, and given all the macro headwinds that we are talking about, I think this is a sector which will show resilient growth, at least in the domestic market.
So locally focused names here, Nithya, is that the kind of bunch from which you want to buy stuff?
No, I'm a bit more positive on the US market and the rest of the year. I do believe that generic pricing will look better. I think we were looking at about 10-11% pricing deflation on the base last year. I'm hoping that comes off to a more manageable 5 to 6% levels this year. And on top of that, there are a lot of brands that are losing exclusivity, which means more opportunities for generic companies to launch new products. And in particular, Revlimid is shaping up to be quite a meaningfully large opportunity for names like Dr. Reddy's for sure, which is launched. But I think Cipla is also in the market. So we do expect the US story to turn around. And in addition, I've always been a big believer in continued growth in the domestic market. While we do have a large base from last year, and therefore last quarter was a little subdued, but if you look at data that's coming out in the last few months, we are seeing a fairly healthy, close to double-digit growth. We're talking about 9 to 11% kind of growth is what we are noticing in the India market as well. Okay. So I do see the earnings turning around in the second half of the year.
Nithya, good morning. You know, one stock that stands out is Cipla in its strength. What's going so right for the stock, and what's your view on the stock?
So Cipla is one of our topics, and both in the short term as well as the, let's say, the medium term, about 1 to 2 years from now. And the primary reason is, one is, of course, they have almost 45% exposure to India, and we spoke about why the domestic market is attractive. But in addition, I think Cipla is one of the few names which possibly has multiple tailwinds supporting their growth. We do see double-digit growth rate on the back of a very strong complex generic pipeline that they have been developing. Last earnings call, they spoke about how they have 10 such differentiated assets, each of which could be $30-35 million kind of annualized opportunity. So they have many more shots on goal compared to most of the peers. And therefore, we see one material opportunity after the other materializing in the next 2-3 years. And therefore, possibly one of the few names which will grow quite aggressively in the US market.
Nithya, this call is like a tactical near-term call, or are you saying that generic pricing is now turning around? I mean, it's hit rock bottom and it's turning around. We had the management of Lupin not very long back with us, I think about a month and a half back. And to quote him, he said that, the US generic market used to be like El Dorado. Now there is a drought. And we don't see the drought ending anytime soon. The end of quote. This is their comment. Yeah, go on.
See, that's a fair comment because competitive intensity has not come off. Right? You're still seeing 12 to 15 competitors in any generic molecule. I think my comment around pricing was more relative to what we saw last year. Last year was particularly bad because there were additional inventories in the system. And companies got a little desperate in terms of liquidating inventory on time, and therefore they got aggressive on pricing. Right? At least that phenomena is softening. That's not true anymore in 2022. And therefore, we're looking at a more normalized price erosion levels. It's not that price erosion won't be there. I think that's the name of the game when it comes to US generics. And I fully agree that it's not a secular growth story. It'll be players who have something interesting in the pipeline, right? Something differentiated, something where they're likely to see very limited competition, and therefore they can get high market shares and enjoy good pricing.
Okay.
So at least in our coverage universe, Cipla is one of those names.
Okay, Cipla, and then you have Dr. Reddy's as well, right? That will benefit from the launch of Revlimid. I was reading that Revlimid had sales of almost $13 billion globally in 2021. So tell us, for Dr. Reddy's particularly, are you raising your earnings estimates? What is the kind of target price you have on the stock because of this opportunity?
So if you look at Revlimid in the US, which is the opportunity we're talking about, it's about a little more than $8 billion before generics entered the market. For Dr. Reddy's, I think the reason it's interesting for Dr. Reddy's is in two of those trends, so the 2.5 milligram and the 20 milligram, Dr. Reddy's actually has a first to filer advantage in the sense that they'll be the only generic in the market for 180 days. In the rest of the strengths, Natco, who's partnered with Teva, had already launched in May, and Dr. Reddy's is now one of the second generics in the market. For Dr. Reddy's, I don't think any of us are upgrading earnings now because this is an opportunity that I think most of us on the sell side and the buy side as well, we are aware of. The reason it's interesting is because of the way the settlements have happened. This is a limited quantity opportunity. So Dr. Reddy's or Natco can only sell certain quantities of the product as agreed with the innovator. And therefore, the price erosion is expected to be far more nominal than you would see in a freely competitive market. Right? That's the reason this is an exciting opportunity. And I think that'll play out up to 2026, middle of 2026, when the market opens up more broadly and there are no quantity limitations anymore.
Okay.
It's already done well, right, Dr. Reddy? I mean, the market's moved down about, I think, 4-5% last few days. Dr. Reddy's is up about 9-10%. Outside of this particular opportunity, is there any visibility to for the company to get to its medium-term margin guidance of about 25%, or not really?
See, we do think that Dr. Reddy's is one of the more deeper pipelines when I compare it to peers. While not a lot of these are, complex generic or limited competition opportunities, I think the tail is actually quite long. So beyond these products as well, we see them as participating in pemetrexed, bendamustine, bortezomib. All of these are injectables. We see them as participating in darunavir, lubiprostone. So these are oral solids. So quite a long list of products that we're expecting them to launch in FY23 and 24. So we do believe beyond Revlimid as well, there is enough in the pipeline for them to maintain a good trajectory both on the top line as well as the bottom line.
Just one final question. What is going so wrong with Lupin? I mean, last year the stock was what, at 1200? It's halved since then. I do know that, of course, the earnings gone by were also not that great, both domestic and in the US business. But do you see any respite at all?
See, I think two things need to happen. One is the market's been anticipating some complex generics that can potentially play out positively for them. Generic Spiriva in the US is one. Unfortunately, I think they have received a CRL, which means they need to respond to the CRL. And once they do, it gets into another FDA review cycle, right? Which is going to take them another 6 to 8 months before they get an approval. So you're now looking at quite an important product opportunity having been pushed out by one financial year, right? And the second is, I think India as well is not firing as much as it used to for Lupin. And in particular, I think in diabetes and cardiology therapy, given all the competition that Lupin is seeing in the sitagliptins and vildagliptin and dapagliflozin, etc., it seems like some of their products are therefore not doing as well as they did pre-COVID. So therefore, both the markets are unfortunately a little subdued, which is weighing on margins. And that's the reason for the stock performance. We don't see this turning around till generic Spiriva comes through in the US.
Okay, Nithya, thanks a lot for joining us. Good talking to you as always. And of course, the ease with which you took the name of all the complex drug names. You want to try, Sonia? Repeating any of them?
Revlimid is the easiest one for me. Hopefully, none of us will ever have to use it, right? The cancer drug, but it's the easy one to pronounce.
Yeah. Okay, Nithya, thanks a lot. Have a good day. We'll take a break. Up next, we'll discuss the market technicals. Sudarshan Sukhani and Mitesh Thakkar will be joining us.